A strong fixation exists on crafting the best investment portfolio. If you Google, you will find hundreds of such best portfolio design. You have the Warren Buffett 2-fund portfolio, Boglehead's 3-fund portfolio, all-weather portfolio of Ray Dalio. So what's the real secret behind the perfect portfolio? No one knows which portfolio is going to perform best the next year. For example, in the calendar year 2020, portfolios based on large cap stocks did poorly compared to the mid cap and small cap. In calendar year 2019, large caps did significantly better than the mid caps and small caps. Value style funds did well in 2022 and 21, but they were the bottom performers for 3 years in a row earlier. Quality style of portfolios did well in 2018 and 20, but they were the bottom performers in 2019, 21 and 22. So what sector will do well, which market cap will do well, or which style will do well in the future? These things keep changing with no predictable pattern. Here are a few thoughts on looking at creating a portfolio. Simple approach: buy the broad market index fund like the BSE 500 fund and hold it for long. No asset allocation or rebalancing, but consistency matters here. It's simple, low cost, very well diversified amongst the top 500 companies. This is suited for young wealth builders who are in their 30s and 40s. This fund has delivered good performance over the long term. Will Bernstein is a neurologist who studies the brain. His no-brainer portfolio suggests a mix of 4 funds: a broad market index, another 25% is a debt fund like an all-seasons bond fund, another 25% is a high-risk, high-return mid-cap or a small-cap kind of a fund, another 25% diversification through international stocks. This will be rebalanced periodically to help book the profits by selling what goes up and we buy what has become cheaper. Or you could build a portfolio of active mutual funds based on your unique risk profile and asset allocation needs. Managing active portfolio is both art and science of prediction. Russell Fuller describes 3 sources of generating alpha or excess returns. The first is the information edge. This entails studying their business results, engaging with the management and more. This will get us in the race, but it will not win the race for us. Second is the analytical edge. Everyone possesses identical information and data these days. So it is about better interpretation of the data using quantitative models. The third and the most important is the behavioral edge. This talks about the psychology of investing. The chief problem of investor is likely to be himself, temperament over knowledge. In a T20 cricket match, if in the last over 10 runs are needed to win, the bowler is told to steer the ball to the offside, but the batsman is also adept and prepared for this. Then it all depends on the temperament of the bowler and the batsman. If the batsman hits a 6 in the first ball, the bowler gets jittery and he loses. If the first ball is a dot ball, then the batsman gets jittery. It boils down to the temperament and not so much about skill. This is the focus of behavioral investing. Regular finance assumes people behave rationally, but behavioral finance experts have shown that people act less logically. Fund managers use this gap to make money when investments are priced wrong due to the irrational behavior of investors. Philip Tetlock, in his book, dwells into the traits of SuperForecasters. SuperForecasters consistently are more accurate in their predictions. They are able to do this on account of their critical thinking, humility, revising and changing beliefs based on evidence. They have the ability to analyze vast amount of information. SuperForecasters, fund managers beating markets long term, avoid emotions, biases. They value multiple viewpoints. The concept of perfect portfolio therefore doesn't exist. What matters is a portfolio that suits your need. It's best to adopt a style that fits you and avoid constantly changing it due to shifts in the investment landscape. Please do like the video, share it with your friends, subscribing to this channel.